Hi, everyone. The asset management industry heads into 2026 navigating slowing growth. That is according to ISSMI's latest State of the Market report. Powered by the industry's most complete data ecosystem, ISS Market Intelligence has been the trusted intelligence partner to the world's leading asset managers for more than 30 years, helping firms refine product strategy, strengthen distribution, and stay ahead of evolving investor needs. And as we wind down 2025, we're going to take the time right now to take a look back at the trends that shaped the year, from top performing funds and managers to shifting advisor behavior, global product developments, and emerging opportunities for asset and wealth managers. Joining us to share their perspectives are Marc Barrachin, Global Head of Products, and Adam Feldstein, Head of Product and Client Engagement at ISS Market Intelligence. And I want to start with, as we look back at the past year, what are a few of the most significant trends shaping asset management at the moment? And what shifts are we seeing in advisor behavior and investor priorities, both domestically and across global markets? And with that, Marc, hello and welcome.
Thanks, Michelle. So I look at this in three major components, right? I'd be loath to not speak about technology because it's everywhere. You open the news in the morning, it's AI, it's cloud, it's whatever it is you want. So I think that to me is a big accelerant, right? It's you think through 2025, the speed at which things have changed is quite dramatic. That leads to a little bit of difference of expectations in the investors and the advisor community. So everybody has to adapt to this new technology. The second trend I see, and this is something I feel very strongly about, and I've talked to a lot of our customers, are demographics, right? And you've seen there were a couple articles over the last few weeks around wealth transfer. I've actually looked at the population pyramid of the United States. I've also looked at the advisor population, right, that we track. And both have a barbell scenario. So you have this very large part of the investment public that is in the 60 plus category. They have most of the assets, but they're coming into sort of the distribution phase of their life and eventually the wealth transfer. Then on the opposite side of that, you have the younger population, the 25 to 35. A large part of that population, they may not have all the assets, but they will be. And this is where the growth will come. So as an asset manager, you have to kind of manage both of those. And if you go back to the technology, they have different expectations as to how they want to be served. Now you take all of this and you say, well, this is all well and good. By the way, here's the other third component, is the macro picture, right? The level of uncertainty in the market is pretty high. Whatever the VIX tells you, there is a lot of uncertainty, tariff, geopolitics. And the reason I think this is really important, I looked at the defined contribution assets over the last 5 or 6 years. And you think about defined contribution 401k, most of the asset growth, or actually all of the asset growth, is due to market movements. So you go back to 2021, 2022, the assets dramatically decreased and then they increased, while net new flows are essentially flat to negative. So I think those are the three components you really need to think through. And you can tie that into the consolidation that you see in the industry, both in the asset managers, right, where the top 3 asset managers hold something like 63% of the assets, top 10 own 75% of the assets. And then you're looking on the advisor side of things, and firms like LPL and JP Morgan have seen their number of advisors increase by over 20% over the last 5 years. Fidelity and Schwab have increased their population by over 40%. So you're looking at all these trends, and they're not independent, right? They're all connected. The demographics, the technology, the macro picture, how that all comes together and shapes the industry will be interesting to see where we go.
Now, based on the flows and launches, let's now discuss which ETFs or funds stood out this year. And are there specific themes or new fund types that advisors are gravitating towards? And with that, Adam, I'm going to turn to you. Hello.
Thank you. Hello, Michelle. So it's interesting. I think if you're looking at ETF trends today, you have to look back over the past several years to see what the trajectory looked like. If you go back to the end of 2018, ETFs in aggregate, which was mostly passive at the time, made up about just over $3 trillion in assets. Fast forward to today, we're at about $14 trillion in assets. And I think what's even more interesting, if you look at the growth trajectory of passive versus active ETFs on a year-to-date basis have grown 40% passive ETFs have grown about 7%. So there's a shifting dynamic there. When you look at it in terms of who's growing on a year-to-date basis, we have firms like AXS, Goldman Sachs, Granite Shares, and where they're growing, it's interesting. It's digital currency, right? Bitcoin ETFs, and it's a lot of single stock ETFs, which is very interesting. And when you look at launches on a year-to-date period, the largest category was those trading leveraged equity single stock ETFs. There are about 173 products that came to market so far year to date. Following those, you have derivative income and defined outcome products, your buffer ETFs and things along those lines. Outside of that, all the other categories are minuscule compared to those top three.
So as asset managers look to differentiate themselves and gain broader reach into the intermediary space, and more specifically into the growing RIA channel, let's explore now what are some of the frequent conversations that people are having with clients regarding this shift. I mean, what are some of the top questions that they have been asking? What do you think?
So the question hasn't really changed. The question has always been, who are my competitors? What do they look like? What are they doing? How do I compare to them? Right? We've been answering those questions for decades at this point. I think where it gets interesting is the recent integration. We moved some 13F data into our Market Pulse platform. Market Pulse has been in existence for 30 years now, formerly known as SimFund. A lot of people will know that moniker. And what we're able to do now is not just look at a fund or an ETF compared to its category, right? We've been able to do that. What we're able to do now is look at a fund within a category at a specific intermediary. As an example, like let's say you want to launch an actively managed high yield bond ETF, right? In the past, you would compare yourself to all other active high yield bond ETFs. But now, if you're trying to gain access into LPL or Raymond James, you can look at your competitors at that intermediary with full transparency. You could see their performance, you could see their fees, you could see their growth, you could see their modern portfolio theory stats along with yours. So now you can see where the competitive advantage, disadvantage is, and that empowers your national accounts team, your field and internal wholesalers, your product team to just have a better sense as to what's going on in the space.
And Mark, how are the firm's tools and data sets helping asset managers really make these types of decisions?
Well, so I think there's the tactical component, which I think Adam covers around the sort of the data sets and the tools that are available. When I have conversations, I tend to speak with the senior executives that have what I consider, I call it a portfolio management problem, right? Is it public? Is it private assets? Is it institutional? Is it retail? Is it in retirement? Is it in advisory? Is it in insurance and annuities, right? So is it education? Is it 529? So there's this entire plethora of financial products, types of markets, types of instruments. And the question is like, where do I invest? Where's my ROI, right? I have limited amount of resources. And I think this is where bringing all our data sets and all our assets together really, really has been making a big change. We can provide both the data of where it is today, but we can also say, hey, by the way, here's how you compare, right? The benchmarking tool that Adam just covered, but also adding our research and our expertise and sort of the forecast that you can layer on top of that to provide sort of that strategic insight of where the markets are going. And then the asset managers and the banks use that as part of their strategic planning exercise, right? So one of the brands in Canada, for example, the household balance sheet, in the US, you mentioned the state of the market. All these are the tools that leverage all the data, the insights, and say, hey, here's where you can go, right? Obviously, that's up to the asset management firms to decide where to go. But being able to put all this data and say, doing this globally, right? You look in Europe, some of the largest asset managers there, they're not continental European anymore. They're not UK, they're the US. So as the world becomes global, you have this portfolio management you have to deal with. And I think that's where we've been focusing on.
What's some of the key insights that really stand out when looking at these trends?
To me, I think about this as not just a product, right? Talking about, with Adam, we talk about products a lot. We talk about fees. I think about where does that work with distribution and how these two things connect, right? So I was talking to our Canadian team, and we're talking to a Canadian institution that wants to come in the US. Or we're talking about US private market investors that want to go into Canada. And they said, well, I've got the assets, I've got the money, I know how to distribute this. Distribution channels are different depending on where you look at. So you can't just say, hey, I've got my product that works in this geography and I'm going to move it over here. You have to really think about both the product strategy and the distribution, and you have to really think about this globally. And I think that's where it's been the most hectic, I'd say, but also a bit of the most fun.
We're going to talk a little bit more in detail about distribution. I mean, even with strong products, distribution remains key in today's rapidly evolving industry. And the question here is, how are asset managers navigating that shifting landscape today? And where do we see innovation in getting products to the right clients most effectively? I know Marc touched upon some of it. Adam, can you give us your insight?
Yeah, so it comes down to primarily knowing your client and having a good client segmentation, managing your CRM, because what's good for one is not good for all, right? So we do an advisor survey about 6 times a year. We interview about 700 advisors across channels. And one of the questions that we always ask is, if the same strategy is available in a mutual fund, an ETF, and an SMA, which are you going to choose, right? No surprise that there's more of a focus on ETFs. There's less of a focus on mutual funds. SMAs tend to stay range bound. They're pretty steady. But we're also able to break that out by channels. And it gets very interesting when you look at it that way, right? When you're working with wirehouses, right, they're more likely to use the SMA product. That's what the data tells us. RIAs are more likely to use an ETF. They're very fee focused. Regional independent banks are still biased towards the mutual fund. So if you're an asset manager that has a strong SMA strategy and you're going in to speak to an RIA that's not likely going to use an SMA strategy, is that the right conversation to be having? All right, so using that information to inform your field distribution team and having the right conversations with the right people is one of the best ways to manage that distribution effort.
We're going to talk now about retirement assets and investing trends. I mean, where are some of the biggest opportunities that we see here?
Well, it shouldn't be a surprise that the CIT is becoming the vehicle, the choice of the day. They're coming way down market. They used to be a very high-end product. They're not anymore. We've seen funds actually convert to the CIT wrapper. But outside of that, the mutual fund is still a very viable vehicle within the DC space. In fact, you can argue that the mutual fund in the DC space is actually keeping the mutual fund afloat today, right? We're seeing a lot of assets leaving the mutual fund, but within the DC space, you either have a fund or you have a CIT, right? It's to be seen what happens with ETFs. If they ever become viable products within the DC platform, but right now it's surely CITs and open-end funds, especially around target date products.
And Marc, we're going to wrap up with looking ahead into 2026. I mean, what trends, opportunities, product innovations do you see shaping the market?
So I think I see the same, but faster and more. I don't think there's anything new quite yet. There are new trends, but it still fits within the big categories, right? So how advisors handle technology, how the asset managers and the advisors manage the sort of that younger population I talked about, and how do you start interacting with them? You do more customization, but by the way, service is still important. Advice is still important, so you can't just go everything is on the machine. So I think those are really key. I'd go back to our state of the market. I think the challenge is going to be our expectations, right, based on our team's analysis, is we see lower returns over the next few years. I see more fragmentation between equity, fixed income, US, Europe, UK, Australia, Asia. So that means for anyone who manages money, you have to navigate this, lower returns. So if your expectation is you're going to retire or your customers are going to retire in X number of years, and you expect an 8% growth rate, maybe it's time for you to start thinking about changing that a little bit. So I think that expectation, right, moving forward, the diversification of the products, whether it's the CIT, the SMA, all the channels that you as an investor have access to, and I think that's where the asset managers and the advisors really need to focus on, right? How do you serve that and investor at the end of the day and gather those assets? So I think it's more of the same. I'd probably leave with the last bit in my mind, which is we haven't talked about private markets. But they're coming to retail. How that's going to shape up and how big that's going to be, I think that adds another wrinkle, right, to the picture and the complexity.
All right. Well, gentlemen, thank you so much for stopping by and giving us your incredible insight.
Thanks, Michelle.
Thank you for having us.
All right. And thank you, the viewers, for watching this segment here on Asset TV. I'm Michelle Yu. We'll see you next time. Take care.